Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Thursday, and this is the 15th of September, 2002, 7:02 p.m. Central Time. Now, you see these dots on the chart? This is September. I want to finish with September tonight, and then we'll be into the December contracts. They expire tomorrow. So off the board they go. The public has moved to the D's. In my morning subscriber videos, I did it, but why not just finish up with it and we'll be done. Very shortly now, this coming week, I'll be moving into the December currency. So getting rid of September's on everything. Be ready for that. I might do it over the weekend. We continue to break down. We are down for the week 4.6% in the S&P as we're talking at this point. How much further it'll stay, I don't know. But if it were to close just like this, you'd have lower highs, lower lows under the 18-day average. For me, I'd be looking, are we coming back to that low? I realize there's a big group of people out there, a big group, that is looking at the 3,900 level. And for all purposes, that's the zone you're at, even though you're down at 38.79 tonight. And they're thinking that has to be the support zone. When I look on the chart, I've said it to you before, I don't understand that number. I think I'm a pretty good chartist. I'm not seeing why 3,900 has to be an important number one way or the other. They're looking at the tops there. I've tried everything. I don't see what they're saying. So now the question comes right here. The last break low was 38.8350. With tonight's action, you just slice through that. So you're into that part where now, does it continue on, like I'm saying, into this next break of lows and that ultimately the June low at 36.39? I can't answer it, but here's what I can answer. I have been prepping you that I thought you would get a crossover where the 18-day average gets under the 100. Even the D's contract will have it now. And boom, you're getting it. Normally, that means you're going to get a lower low than the most recent low on the chart. I'm going to repeat. If you look on the chart, the prior low was 38.8350. You have that breakthrough and you have a new low in the market as you just got to 38.70. Are you grasping some of what I'm trying to point out there? I think it's important. In terms of Bollinger Bands, the big support that I'm looking at now is, will the market make it down to 38.27 and try to hold a little bit? Being a Friday, maybe there's profit taking. Traders might want to hold back. Momentum is oversold. It is a very hard market to get short on. This has all happened since the CPI report, and it's given you no respite at all, no way to come into the market. It's just been straight on down. It's been a heck of a ride in that marketplace. Let me get over here and if I could get us to the next charts as I want to see them. Here. There we go. Now it's in sequence. It took a moment here. I don't know why I didn't want to do that. All right. Let me bring you to the NASDAQ. In the NASDAQ, lower highs, lower lows. As I see it, you're setting up for a test of the Bollinger Band right away in this market. As I see it in the Dow here, lower low, higher high. Looks to me like it wants to slip down as well into the Bollinger Band. What else are we all seeing? Crossover, bearish crossover occurred here. Bearish crossover occurring right now with the 18-day under that. That means you take out those lows. At least that's the way I teach charting. And you did it in the S&P. So you got all three of these having done it. And when we come to the Russell, as I told you earlier, this still has lower high, lower low with today's action. But at the battleground is crystal clear. It's trying to support itself at the 100-day average. If that gives ground with the others just coming with you, then the Bollinger Band becomes the next number. In the VIX cash, tomorrow morning, I'd be surprised if the market, if you stay down like you are tonight and pick up any momentum from that in the morning, that you don't get out of here and challenge the upper band again in that. Then we get to the bonds and the notes. Fully embedded readings. What does that tell you? Bearish, bearish, bearish. And that's the way that you go with this. Continuing to the bear side here. As we take a look at the foreign currency market, I thought you'd start spinning your wheels because of the narrowness of the Bollinger Band. I have not changed my opinion. That's what I think is going to go there. And the flip-flop of it is in the euro. Where it's not like that is in the British pound, which could easily get down to the 113.68 level. But you're liable to say to me, Ira, Would you go short here? Well, how do I tell anybody to go short in an oversold market? It's not something that I would do. So the answer is no, I don't have any plays that you can make. Bitcoin, still slipping. You can see the futures market's got a lower low, higher high. Seems to be caught in the Bollinger Band pattern as well. Brent versus WTI crude in the November contract, still giving you the benefit of the Dow staying under the 18-day average, so the pressure stays on the spread. And if you look at what Brent is doing, coming down. Now, what do you think OPEC's saying to itself right now? They already said the market's schizophrenic at the beginning of the week. Now the prices are falling down on them even further. All they're going to say is they're going to cut production. The market has too much production for the fundamentals as they see it. And therefore, at their next meeting, which will come up, I guess, beginning of October or whenever, they will set and probably cut again. They cut 100,000 barrel production at the meeting that they just had. I wouldn't be surprised if they increase that amount. And let's get over here now, if I could, to this. I don't know why I'm out of sequence today, but it might be my finger. When I look at WTI, I said the 18-day average would be the battleground it is. You have a lower low, higher high, and you're going nowhere in the gasoline market. And in the October natural gas. So far, the idea that the Bollinger Band and the 18-day average would come together and support the market has certainly worked itself out. Now you've gone back to the 18-day average and the battleground has to begin. We keep building natural gas and storage, but we're getting closer and closer to where that terminal that had the explosion a couple of months back will come online. Exports will pick up at the same time the colder weather sets into the U.S. I think you'll be looking at a bottom in the market at that point in time. It's not far off. I want to remind you, we put out a lot of market research, and we do it in a way that it's easy for you to keep up with. What do I mean by that? Well, the simple fact is we write on all the markets. So throughout the day, you're going to get reports on weather for the grains, cash markets, what are they doing? What are the spreads doing? What are the option plays doing in the market? What do we think the fundamentals look like? How does it all come together? And you can pick the different markets you want stuff on. If you're never going to trade coffee, sugar, cocoa, why get that information? You let us help you with that. So if you go to our website and our free offers, you can sign up for the Linn Research. We'll tailor everything you need, make your life easy to get it, and I think that'll help you with anything that you're trying to put together one way or the other. How to get all this is simple. Follow my finger. Just pick it up to the very top up here. You'll see an icon appear. As soon as you see that icon, all you need to do is give it a click. You can call my staff. You can go to our website. Those are the ways you do it. Sign up for it. Again, thanks for attending the webinar. We had a sellout. No cost to it, by the way. You have a great day.